right, welcome back. Let's do some more moves because Eaton beat on their earnings. And Stephanie Link also bought more of that name. So let's go back to you for a stock you've liked for a while now.
Sure. Yeah, I think there were very high expectations just on electrification in general. GE Vernova, Vertiv, Quanta Services all reported excellent numbers, raising numbers as well and guidance. And Eaton, they beat, but they just maintained it. I think they're being conservative. And the most important piece is Electrical Americas. That's why I own this thing. And organic growth was up 13%, much better than expected. And margins expanded and backlog expanded. So to me, the story is very much intact. It fell 3% at the open. I bought a little bit more. It's now my largest electrification play, but I still like Quanta Services too.
All right. Another one to get to is Blackstone, which is having a pretty darn good day here, up near 4%. We mention it not only for that reason, but Rob Sechin, you bought this too.
Yeah, Scott, we bought it last week. Wish I could have jumped on the show to talk about it. Year to date, it was down about 20%. It trades at a 25 times forward PE. That's down from a peak of 35 times last year and 10% below its 10-year average. AUM is growing in the high single digits. They've got great operating margins. They are obviously the world's largest alternative asset manager at $1.1 trillion. The story here is they have a healthy diversification across all categories, but the real opportunity for Blackstone is the growth in the perpetual evergreen vehicles and the push into individual and retirement channels, which dwarf the institutional channels today. Individual investors have just 5% of their allocations in alternatives. We're seeing that migrate up with price premiums in traditional assets, and they will be the lead beneficiary of that. So we liked entering this stock with the sell-off that we've seen from a high of 199. I think it's like 138 today.
All right, yeah, 138 and 73. Appreciate that. Let's kick some other stocks around. Amgen, they beat, at least their earnings did. The revs were in line. Kev, you own that name.
Yeah, incredibly strong quarter, $4.90, I think crushed it. There's also the idea that they're coming out with a GLP-1 drug that could be completely revolutionary, but this is a value stock in my opinion.
Why is it down 2% if they crushed it?
It's been up a lot.
You think it's just giving a little back? That's it?
I'm surprised it's down, to be honest with you. I don't think it should be. I'd be buying it at this level.
Well, of course you're surprised. You said they crushed it. The stock's down 2%. I figured you'd be surprised. EOG, they beat. Let's look at that one. Sarat, you got that?
I do. I like this company. I think it's one of the best independent plays out there. Dividend of 3.5%. They do special dividends almost once a year. They've cut their capex a little bit just to kind of monitor prices. But if you're going to be a long-term holder in this space, EOG is one of your core holdings.
Show me Chevron too, guys, please, because they had their EPS in line. Their revs were a miss. That stock is in the green, though. Sarat, you take that too.
I do, and actually it's nice to see it pop because expectations were pretty high for this company. They came in, they're still buying back shares. Their dividend's close to 5%. So you've got some support here at these levels. And why I like these companies too is because now they have balance sheets so that if oil does get lower, they can make some more what we would call some good acquisitions.
You don't even discriminate between the two companies, the majors, Chevron and Exxon. No. You own both.
I do, because they've just merged in all the companies that we've owned over the past year. So you end up owning both of those as the behemoth. And then we have EOG and Schlumberger to kind of corner that as to our oil and gas exposure.